What's up guys, how's it going? Today I wanna do a quick backtesting session to kind of show you how I look at the market, how my strategy works and how I execute right now. I'm gonna backtest just a week on, oh wait, let me just do this real quick. Camera can go here. Let's just keep it small so there's a little bit more room to show to you guys. But I'm just gonna backtest on TradeZilla. I'm gonna do 1 week of NQ, starting from Monday, June the 10th until Friday the 14th. That's just a full trading week from Monday to Friday. Just gonna go through it pretty quick. I'm not gonna do it perfect. We're trading on New York time. This is Amsterdam time. It doesn't adjust with it if I change the time zone, so don't look at that. But for now, we are at market open. So what do I do actually when the market is about to open? Let's say like I come into the market 15 minutes, 20 minutes before market open. All of this is news, so ignore that. You can turn that on into your trading view settings as well if you want to. But how I look at it is overall, where are we going? Okay, I don't try to predict exactly every move. I try to respond to what the market is telling me. Right now, it seems like we had this huge upward move on the 4 hour with a big fair value gap, and we already manipulated a little bit into it, or at least responded from it. And it seems that we did get a bullish reaction out of it, but now we're kind of retracing. So I would say that we will go down, sweep this one, still get the reaction out of the fair value gap, and then eventually go up. But that's something that we're gonna see. If we go to the 1 hour, look, I'll be more than happy to take longs, but I do need to see a liquidity sweep first of this one, because then we also get the higher time frame delivery, of course. And in order for us to go short, well, let's see, what do we have here? We have Sunday, Friday. Well, previous week's highs were all the way up here, so that's a good target when we go long if you want to catch a really big move. But for now, in order to go short, we need to get some retracement because we don't get a liquidity sweep pre-market per se. We have the Asia highs right over here. We have, what do we have? We have London session highs over here. Or is this Asia session? I know, is this Asia session? I'm not sure. I'm not used to the New York time zones, but I just wanted to do it for this video. But in order to go short, we need to get some retracement into one of these fair value gaps right over here, and then get an inverse with a change in state of delivery. And also, I don't look at ES because I haven't quite figured out how comparing them works, how using both of them works, how SMT works. I have an idea of it, but I haven't done enough research, so I'm not going to pretend like I know how it works. So let's just see. Market opens. Let's just put it on 5 speed. Market opens. We go up. We tap into the 15-minute fair value gap. We respond off both of them actually. We get a small liquidity sweep. If you go to the 1 minute, we sweep a couple internal highs. So we could take a short out of this, but we will need to see, let's see, yeah, no. We get a small, this is good. We get a big displacement candle, we get a small 3 minute, nothing on the 1 minute, 3 minute, and nothing on the 1 minute. So, well, we do inverse this 1 minute, we get this liquidity sweep, change in the state of delivery, we could enter up here. And also, what is the change in the state of delivery? It's the last couple of candles before the liquidity sweep on the lower time frame. So this will be the upward move on the 1 minute. We get a big displacement candle to the downside. Stop loss above. Well, let's see. We could place a bit of a bigger stop loss actually to be a bit more safe. But if you want to catch a one-to-one, oh, we can catch a one-to-one from here. Or we can also go to these lows, which are London lows. Yeah, that's a good target actually. These are London lows. Go here. And I started on the brand new 50K account, assuming that I need to pass an evaluation. So I'm going to click sell, boom, play, and we just chop around, okay? This is something that just happens from time to time. As you can see, the market went down, you know, it responded of all the confluences, and then it just started chopping. It almost stopped us out, so the bigger stop loss is good. And now we just kind of chop away, and usually when you have all of this chop, it's kind of like a sandwich pattern, you know. Out of this type of chop, it will usually just rally either up or down. So we're gonna get stopped out now, I think. Yeah, we got stopped out, and price just continues higher. Okay, that's just something that happens from time to time. So we have a loss of 488 euros. Something that happens. But if you look at it, we got a rejection of this manipulation wick low from the London highs, London lows. We're not responding yet. We have this big 30 minute and 50 minute and 1 hour for value gap, which is a pretty strong draw of liquidity. Since we're coming from this chop, it's kind of like, okay, what are we going to do? Not completely sure. We do get the 50-minute inverse if we can close this candle. Yeah. Okay, so we might get a re-entry because it's still not the ending of the trading hours. But since we get all this chop, I'm not really sure if I'm interested in taking another trade. Because we get this breakout, and as you can see, we're starting to get this trend line liquidity over here. So I think there's still a chance of a reversal coming from somewhere. So let's see what happens. No, we kind of just chop, like we just go up and up and up. So we take an L for the day. Let's just go to the next trading day. Boom, remove the drawings. Let's see, 4 hour, what do we have? What happened? We kind of just kept going up. That's exactly what happened, which is completely fine. On the 4 hour, we don't have any inverses. We're coming from some consolidation. Maybe it's not the best day to choose for a backtesting session, especially for a video, but who gives a shit? You know, you can't always expect a good trading week or anything. Well, as you can see here, since we're bullish, we are actually responding off this 1 hour fair value gap, and we sweep these lows, which is really good during pre-market. So we're probably maybe assuming that we can be bullish. In order for us to actually continuing the trend, since we don't have anything to deliver off, we can also just say like, hey, we're getting this 1 hour delivery. We already have the pre-market sweep, or more like a London session sweep actually. And then we just click play, we see what happens. Let's just be a little bit conscious. Again, a lot of chop, okay? This doesn't tell us anything, okay? At least it doesn't tell me anything. So I would need to see some pretty strong breakout, at least, out of the chop in order to, like this, okay? What do we have here? Let's go to the 50-minute. Is there opportunity for shorts? Let's see. We are responding from this 1 hour for value gap. If we get like a strong liquidity sweep, because we're sweeping all of these highs here. Okay, see, this is something where I wouldn't have found my entry on. If you go to the 5-minute, nothing. We come from a lot of chop. We get this liquidity sweep here. Even on the 1 minute, let's see. We get a 1 minute inverse with a 1 minute change in the state of delivery all the way down here, okay? If you would say that this is the liquidity sweep, sweeping all these highs, change in the state of delivery would be literally right here, okay? But since we're coming from all this chop, I wouldn't be able to actually tell exactly what we're gonna do. It's just, again, it's a sandwich pattern. We're just gonna get a fucking breakout and then it's just gonna go to nowhere. So this probably would have been a no trading day for me. But we're not gonna be too soon because it's still market open, okay? Market open right over here. So we still have some time to actually get something out of it. So let price play out. Since we actually rip right after, what will be ideal if we want to catch shorts right now, which is an opportunity, we just need a little retrace, okay? We just need a little retrace, which can be also in a 5-minute fair value gap. So something like here. Let's see. Beautiful. Okay, and we break through it. Let's see. Well, look, the nice thing about this is, since we actually got the liquidity sweep here, we got an internal liquidity sweep, we still deliver off this 1 hour fair value gap. You know, we didn't close below it. On a 1 minute, we get another internal liquidity sweep. On a 3 minutes, we have this. If we can get a candle closure above this zone, we are back bullish, okay? Boom, boom, changing the state already. So what I would like to do is I enter off this candle, put my stop loss below this wick, go for the easiest target, you know, still get a nice one-to-one risk to reward. We go here, we buy, we click play, and it just kind of chops its way up, but we hit take profit. So that's a nice W, and now we are in profit. Let's just go to the next day. Well, we still have some room to trade, but I don't think I want to catch anything anymore. You're also kind of going to stick to your rules, and I usually have a rule that I only take one trade during London session, during New York session, and only take another trade if, you know, if it makes sense. You know, if you know, maybe there's a re-entry after a stop loss, and I can separate it from revenge trading. So let's go to the next day, start of New York session. Boom. Okay. Wait a minute. What the fuck happened here? We absolutely just spiked up like crazy. This is news probably. Okay, this is news. And since I'm kind of going through it pretty quick, or at least what I think is pretty quick, I'm not really focusing too much on news. I know I should. I know it's a good thing. That's why I have them right here. But I'm also kind of want to just go through it a little bit quicker. So on the 4 hour, is this all-time highs? Oh yeah. Oh yeah. Oh yeah. This is all-time highs if I'm correct. Let's go to the 1 week. Oh yeah. Oh yeah, I can't see more than that. Oh, I can. Yeah, this is all-time highs. Okay, well, let's go to the 1 minute real quick. 1 hour. Since we are at all-time highs, you can just simply assume that we're going to be bullish. Okay, you always want to be bullish, or at least that's what I heard someone said. If you're on all-time highs, just stay bullish. We have this 15-minute fair value gap right over here, where also lows resting in. We come from a lot of chop during Asia session, London session. Market opens right over here, so I could go short just to take out these lows in order to go up again. But since this is news, this is probably news, no? Is this news? Pre-market news? I'm not sure. Haven't checked. Is it? Yeah, this is news. This is definitely news. So since it's news, let's just be a little bit more careful with it. Okay. Okay, well, it kind of spoiled it that we're going up. But let's just assume I don't know what we're going to do. Since it's news, I know for a fact that price will always come back down to kind of fill up all these orders, because news data is just a lot of liquidity. You know, a lot of people just click sell, buy. So a lot of unfilled orders. So I would actually want to wait for price to go lower to this liquidity sweep point in order to go higher. Does that happen? It does. Okay, beautiful. It does. Then we go to the 1 minute, and what do we have here? We get a strong breakout to the upside. Nothing yet. Nothing yet. We don't have any inverses here. We have a really tiny one, but we do have this 1 minute inverse. Oh, we have this 1 minute right over here. If we have a change in the state of delivery already pretty early, we get a candle closure above it. Boom. Well, we are not gonna place a stop loss all the way there. We're gonna put it somewhere, let's say somewhere here. Okay, and then for target, since we don't exactly know what we should target, and I can't see much data from the past, I'm just gonna go with a simple 1-to-1 risk to reward because I'm not gonna risk too crazy. Okay, and I don't want to be greedy. Let's see. Boom. Okay, nice. And we get a W. Okay, it's a small. Wait, what happened? Oh no, nothing happened. It's a small 1-to-1. So far, we got 636 euros in profit. Assuming you have a 50k account, you usually have a 3k profit target. So that's 6%. So we still have a long way to go to pass the account. But, you know, a lot can happen in these next 2 days. Wait, I'm not gonna... No. Wait. Go away. How do I do this? Go. Okay. Now, we sweep these highs, these all-time highs. We can still go lower. So we're still not done with the trading day because we still have all the way until here. And we have news coming. What is this? Can I see this? This is an orange folder. So, I don't know. We'll see. We sweep these highs. Okay. And now, maybe we can go lower. Or maybe not. Yeah, we're not gonna go lower. You can also just take continuation trades. Let's see, we have this 5 minute fair value gap right over here. If you gotta get a little retrace, we might continue higher. Let's see. No, we're not getting any retraces, but we are continuing higher. So we get a couple sweeps, but I wouldn't take any trades yet from here. It's not safe. You know, it's not safe to assume that we're gonna catch any trades. But what do we have here? We get this 5 minute inverse. We see that we have a strong replacement candle to the downside. Again, I can't see data from the past. Get a 3 minute inverses. If we can close below this zone, yeah. Okay, what I will do right now is, since we have all these lows over here, and we have this strong fair value gap 50 minutes, which is also 30 minutes, which is also 1 hour. It is a strong draw of liquidity. So what you could do is you can basically just place yourself a little trade. Let's go to the 3 minute. Yeah. I'm gonna place a short right over here, put my stop loss right above these highs, put my stop loss on these lows. Again, a small 1-to-1 risk to reward. Go here, sell 1%, and let's see what happens. We almost get stopped out. And we're gonna get stopped out, aren't we? Okay, it's past the trading hours, okay? But we're gonna get stopped out, yeah. Okay, we went for something, we went low, so the move was right-ish. We got stopped out, and we didn't take profit. So if you would have wanted to go to take profit, we would have gotten a negative risk to reward, or we would have had to put our stop loss a bit lower. But yeah, we take the L. Let's go to the next trading day. Next day, Thursday. Let's see. What do you have here? Okay. We're still bullish. Like, it's so clear that right now we just need to be bullish. Like, super bullish. We don't have any news. So this is a no news day, it seems. That's good. That's good. I can't make anything out of it than just being bullish, to be honest. We got this 30 minutes right over here, fair value gap. which is getting created. On 50 minutes, it's also there. So let's just wait for a liquidity sweep, an internal liquidity sweep in this fair value gap in order for us to go lower, to go higher. Let's see if it happens. Let's see what we have on 50 minutes. Okay, we get this 50 minute fair value gap right over here, which, wait, what is going on? Why am I, this is not good. I need to go to market open. Market open, market open, market open. Where's 1530? Something happened. Okay, let's just ignore what happened. Reset chart. Thursday, June, 9:30 open. Beautiful. Okay, we're still bullish. We sweep these all-time highs during pre-market, which is good, but this is probably news. So if it's news, yeah, it's news. It's red folder news. So that means that with that, it's going to be a really strong draw of liquidity already. Okay. So that's good to know. Let's go to the 1 minute. We're going to have news data right over here. That's a lot of liquidity. Okay, let's just put news. New. Fine. Why not? We have this, all this, oh, this is, oh, look at this trend line liquidity. Ooh. Ooh, 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 ooh. Okay, the play is we sweep out all this trend line liquidity and then we make the move up. That's what I would assume that we're going to do. Let's just see, market opens. We got to stay sharp, okay? Because we have all this trend line liquidity. We can still take some short of it, but we need to be able to make the right move, okay? So price goes up. It enters this 3 minute fair value gap, which is usually, it's not something I would target, but since we have all this liquidity down here, there's no reason for us not to sweep all of this and then get the response out of this 30 minute fair value gap right over here and then catch the news highs to continue the trend higher. So what you could do, it's a bit more for risk. This is something that you really have to manage your risk with and really be super confident in that you're knowing what you're doing. If this was on a live market, I'm going to be straight honest, I'm not sure if I would have done it, okay? But we sweep these highs, we get a 1 minute sweep right over here. I'm not sure if I would take this actually, because we get these huge wicks to the upside. If we close here. Yeah. Let's say I take this trade. I put my stop loss right over here. This is a bit too much risk. Okay. It's a 1 to 3 risk to reward basically, but it's not impossible. So let's just sell and put a break-even point right over here after we pass these lows. Boom. Okay, we get stopped out. We get stopped out and then price goes lower. But as you see, this is the whole part, this is the whole game. You know, body tells a story, wick does the damage. And this is just a tight stop loss problem. If, let's say I would have put confirm, just give me another chance, okay? Let's just assume that my stop loss is a bit higher, okay? Boom, put my stop loss right over here. Gotcha. We enter. Boom, 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 boom. We come down lower on the, come down lower, lower, lower. We close here, we put our stop loss to break even. And then we go and get the take profit. Beautiful. Now, we're not done, okay? We still have 40 minutes of room to play. And here is the first setup that I actually had in mind. But since we got this huge displacement candle to the downside on the 15-minute, it's a bit more riskier. But hey, we love taking risk, right? We love taking risk. So what do we have here? We get this. We sweep out all of this liquidity. And remember what I said, we sweep out all the liquidity. We get the delivery from the 30-minute fair value gap right over here. Let's see what happens. Price continues lower. Okay. What else do we have? We still have delivery from this 30-minute fair value gap. So it's not done. Okay, it's not done. Let's see. 3 minutes. We have this fair value gap right over here. On the 5-minute, we don't have anything. Oh, you do. We do. So on the 5 minutes, we have. Okay, on the 5-minute, we don't have anything. But on the 3 minute, we are about to get to the huge displacement candle. We get a change in the standard delivery. On the 1 minute, right over here. Oh, what is happening? What am I doing? Right over here. Boom. On the 3 minutes, we get it. And we sweep all of these lows, of course. We get the 30-minute delivery. And now we will go back up. I would actually take this trade. Why? Because we were already coming from such a big move. Let's put my stop loss right over here. And we do the TP. I'm not going to place all the way up there. Okay, you can't assume. I can't just assume that that's going to happen. I will place my take profit right over here because we have this little liquidity, but I will actually place a break-even point at these highs right over here. That's going to be my break-even point. So I'm going to place a trade, 1%. Let's see what happens. And price just kind of chops its way around. Okay, we're gonna get stopped out probably. Oh, maybe not. Now, whenever this happens, you see that there's a lot of volatility. There's a lot of chop going around. So it's like a battle between buyers and sellers. So usually there's literally nothing you can do about this. The prediction was probably right, but we're going to get stopped out anyways. It's past the trading hours. Let's see what happens. Okay, now we actually broke past the break-even point. So right now we are risk-free. So we place our stop loss right over here. And then, or wait. A little bit above it, boom, risk-free. And then we just kind of we just let the trade play out. Let's see what's gonna happen. Okay. And we got out of the trade risk-free. Good, otherwise we would have got stopped out. So that's just proper risk management, okay? That's just proper risk management. We got the break-even point. We have one more day. Okay, we have one more day. Where is it? Okay, I'm just gonna do it through here before anything weird happens again. We have one more day in order to pass the account. Now I know that right now, I know a lot of people usually would kind of full port until they pass the evaluation. But I don't have a lot of experience with the market. I don't have enough experience with the market to confidently do that. But maybe if we take a trade, let's just do 2% to see kind of how that will actually be. You kind of got to test around, of course. Now, what do we have here? We created these equal lows, relatively equal lows. Yeah, beautiful. So that's a really strong draw of liquidity. Let's say we respond off this 1 hour fair value gap. Okay, because we have this news data, so this is definitely something we can still go. But if we respond off this 1 hour fair value gap, we can take out this equal lows. We still have a lot of liquidity to the downside. So we can definitely go short right now if we respond off this. Let's see, we get a couple internal liquidity sweeps. On the 50-minute, we have this to be a little bit more precise. Let's see if this happens. Okay, we actually keep going up. Okay, and also for your context, markets opens right here. Okay, so market opens and it just rips. It just rips. Doesn't mean that it's over. Doesn't mean that we don't have anything anymore to go after. All we need is a liquidity sweep first. Okay. Now, what do we have here? On the 5-minute, we get this inverse fair value gap. Like I just saw that we're gonna get this inverse. We sweep these highs, so that's beautiful. If we go to the 1 hour, we closed. We closed above it. On the 4 hour, yeah, we have nothing. We already inversed this 1 hour fair value gap, so this might not be the best move. It might be a bit trickier. We still have some time to pull off a trade. So we respond from the, yeah, let's just go long. I will take a long of this, actually. Okay, this 1 minute inverse. Nothing on the 3-minute. But since we are kind of like doing more of a continuation, I know I shouldn't do that, but we're responding beautifully from this 15-minute fair value gap right over here. We get a huge displacement mechanism to the upside because we inverse this 1 minute. We didn't get a liquidity sweep, but this is going to be more of a continuation because after market opens, it's basically just start ripping to the upside. And now we just get a little 15-minute retracement, which is normal to happen. So if you want to take a long, all I need to do is get a 50, but this is risky because we don't even get a liquidity sweep. We get this really small, tiny liquidity sweep here. So I'm not, maybe, nah, I wouldn't take the trade. I know it will be a beautiful trade to take, but look what we have here if we just stay patient. Okay, we inverse this 5 minutes to get this internal liquidity sweep right over here. Boom. We are getting, we're not typically, no, we're not getting any higher time for delivery, but you still got to stay a little bit sharp. No, no higher time for delivery, but we get a 5-minute inverse fair value gap, even on the 3-minute, and on the 1 minute, we get a change in the sale of delivery. What I would want to do is, since we get an inverse on all of these candles right over here, even on 3 minutes, and we get an early change in the sale of delivery on the 1 minute, it's a bit too early. So maybe, no, this is good. Okay, let's just go short. Boom, put a stop loss on these wicks. And now I'm not gonna say how I'm gonna full port it all the way until here, but let's say you do that, okay? My break-even point will be pretty early. It will be really early because it's dangerous. My break-even point will be all the way down here. And you can still definitely take like a nice one-to-one risk to reward right over here. But let's just say we're going to target these equal lows, okay? We're going to place a 2% trade to kind of full board it a little bit. Not full board it, but you get what I'm saying. We're gonna go lower, boom, break-even point hit. We put a break-even point to here. Then we see what's gonna happen. We get stopped out and we manage our risk beautifully. Okay, well, the thing is, we end the week in profit, okay? We end the week in profit. Let's see. Boom. We got a 70% win rate. A 70% win rate with this strategy, okay? That's beautiful. And this is including with the break-evens, of course, because you always want to manage your risk that you get a little bit of profit or be exactly at $0 euros. But hey, this is a 70% win rate strategy. It's pretty decent. It's just responding to what the market is telling you. Of course, it's completely different on backtesting because you don't have any emotions Um, but it's pretty fun to actually look at it like this and just test your strategy. I know that maybe I went a little bit slow because I was also talking a lot and explaining a little bit. But I hope you overall get an idea of how I look at the market. So yeah, I know it's a pretty long video, 36 minutes already, but at least you kind of get an idea of how I look at the market. 70% win rate, and I didn't full port it, okay, but we are halfway there to pass the account. So let's say the next week, you know, we start the week strong, we can definitely pass it and get funded starting next week, okay? Assuming you want to go through it a little bit quicker. I'm gonna say this wasn't the best market. Oh, I'm not showing anything. Wait. This wasn't the best week to actually trade because there was just a lot of chop going on, a lot of high impact news. So, but I just chose a random date. It can happen. But hey, again, we're halfway there to pass the account, 70% win rate, and we took 7 trades in total. So yeah, win, 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 loss. So we got, yeah, 5 wins, 2 losses, and this is including the break-evens. We got 2 break-even trades because we manage our risk right. So to be honest, we got 2 losses, 3 wins, and 2 break-evens. I'm going to continue backtesting for myself and go through it like way quicker than I do right now. Thank you for watching, and I'll see you tomorrow.